JSW Steel came out with its numbers with margins contracting and revenues coming in above street estimates. It's been a stellar 2020 and 2021 for those metal stocks, and the steel boom as well seems to be reversing. Prices, though, have been on a decline. In the backdrop of this, we did see the company post a steady third quarter, though its exports moderated. My colleague Aisha Fareedi caught up with Seshagiri Rao, the Joint Managing Director and the Group CFO of JSW Steel, to understand what were the drivers of those numbers as well as what is the outlook on the company's growth plans.
The underlying steel demand, I don't think there is a problem because the prices have got corrected globally in almost all the continents. There is a destocking which has happened in the last quarter. So that is the reason why people find that there is weakness. If you look at as far as India is concerned in that context, month after month, starting from October, November, December, the steel consumption goes on increasing month after month. In the month of December, it is the highest steel consumption starting from April 21 to December 21. So 9.3 million tons. So consumption is increasing. But compare it to the last quarter of last year, that is Q3 of last year versus this year, the consumption has fallen by 7%. That means the kind of acceleration in demand which we have seen in the second half of last year is not there in this year. Majorly, several reasons. One is the monsoon got extended in the current quarter. Over and above that, the threat of Omicron is there in the December. So, and also too many holidays in the month of November. So all this together, there is some slowdown as far as this quarter is concerned in the domestic market relative to last year. But we are seeing a good acceleration in the month of December. So we hope it will continue, assuming that the Omicron will not be a threat going forward in India.
Aren't we all hoping that, Mr. Rao? But tell me, what can you tell me about pricing going forward? What's the visibility that you have?
As far as the prices are concerned, globally it got corrected by more than $100 in the last quarter. But what we have seen in this quarter, after a huge amount of volatility in the input prices, coking coal prices went down as low as $310 per ton. Again, it went up over $400 in the last few days. So once coking coal prices started moving up, and number two, the restocking which has happened, destocking in the last quarter, now people started coming to the market and buying. So these two together, we are seeing there is no downside to steel prices from here on. The cost push will keep the prices stable or having a upward bias. That is the kind of scenario which we are seeing with regard to prices.
Sure. But what happens to your margins trajectory, Mr. Rao? And can we expect Q4 as well to be a little bit under pressure? Because typically you have about 1 to 2 month inventory, but I just wanted to understand what's the visibility going forward.
This quarter, you must have seen the Ebitda per ton has come down relative to the Q2. We were at a level of around 17,000 rupees per ton on a standalone basis and 19,700 rupees per ton on a consolidated basis. So in the next quarter, because we have stabilized our Dolvi expansion of 5 million ton operation, we expect a good amount of volume that would come in relative to the Q3. So even though Ebitda per ton is very difficult to say when volatility in the coking coal price is more than $100 per ton in a matter of just few days, it is very difficult to say this will be the Ebitda per ton. But what we can really guide as regards to the overall absolute amount of Ebitda, I think we should be able to maintain in the Q4.
What can you tell me about exports? Because as I look at your numbers, exports for Q3 have also moderated to about 15% of your sales versus 30% of sales in the previous quarter. What is the reason behind the same?
Our domestic sales, if you see in the last quarter, we have crossed again 3 million tons. Quarter on quarter, our domestic sales went up by 31%. So domestic sales are picking up. We moderate our exports. That is what has happened in the last quarter. So we exported over 8 lakh tons. If you compare year on year, in fact, there is a 72% growth in exports. That means Q3 of last year versus Q3 of this year. But quarter on quarter, yes, it has fallen because of the pickup in the domestic demand over Q2. So that's why we have diverted more steel in the domestic market. That is the reason why you have seen a moderation in the exports in the Q3.
Mr. Rao, with the budget just about around the corner, I have to ask you what your anticipation is, because typically one is expecting a pro-infra budget, and higher infra spend would definitely mean a better business for you.
As far as budget is concerned from the steel sector, we have been requesting the government that the import of coking coal, which we do, which is not available in India as on date, the duties should be made to zero as far as coking coal is concerned. And also remove that 400 rupees cess, compensatory cess, which is being put on coal. At the same time, to make the steel exports competitive, the road tax is not extended to steel industry. So an export of steel, road tax, like any other sector, should be given to the steel sector. Our exports will become more competitive. Road tax, as you know, is nothing but compensating the taxes that are paid in India, which are not moderatable. Therefore, steel industry deserves the road tax benefit, so it should be given. The last point which we are looking forward really is India has become the largest importer of coking coal. So whereas we have large coking coal mines, there should be some policy direction which we expect in this budget to develop our own coking coal mines. Thereby, we can become self-sufficient to meet not only current requirements, but the future requirements of the steel sector in India.
All right, there you have it. That's the management of JSW Steel walking us through their growth plans, the pricing environment, as well as where they see their financials headed. JSW Steel for now, well, down about 3.5%. And the rest of the market too is looking rather somber.